We're about growth, the future, where we're going to go. And what we're very disappointed in is the bill that came before this body today. I think that there are intentions here that were meant to help people that were in homes to be able to stay there, but the unintended consequence could be that we could be killing the housing industry once and for all. We've seen a proposal from our president that said that he wants to limit mortgage interest deductions for people that have a combined gross income of $250,000 or more. That may seem like a great thing. That may seem like those are people who can well afford their homes and don't have to pay for interest deductions. Well, one thing that we know will happen, in all likelihood, from what we've seen from history, when the luxury tax was introduced back in the late 80s, immediately what happened is we saw the boat industry go down. We saw the fur industry go down. We saw the jewelry industry go down. Well, so what, we might say? The so what is that average, normal Americans lost jobs by the droves. And so immediately Congress had to come back and reverse that ill-thought-out legislation so that we could bring those economies back online. And they did. Now, once again, we're seeing history repeat itself. And we're very concerned because we're seeing not only an attack on people who've managed to be able to create wealth and who've managed to have capital formation. That's the genius of the United States. Private capital formation. You're able to collect money that belongs to you, hold on to it, use that money, put it at risk, create a business, create a service, create products that help all Americans and people around the world. That's the genius of the United States. Private ownership of property. What did Cramdown do today? It did just the opposite. It eviscerated pillars that exemplify American exceptionalism, and it's this. It eviscerates the sanctity of the private contract, and it eviscerates the rule of law. What are we without the rule of law? What are we without private contract? When a person goes to a bank and asks for a loan to buy a home, when that happens, that's a private contract between a borrower and between a lender. Today, this body, the United States Congress, said no to those private contracts. It said that now an American can go ahead and go and file in a bankruptcy court, and a bankruptcy judge could open up that private contract and reset the terms, completely reset the terms. What will that mean? That will mean in the future, what lender in their right mind is going to lend to someone to buy a house if they know that a bankruptcy court will come back in and rethink this whole arrangement, perhaps to the detriment of the lender, and the lender may be left holding the bag. And if he isn't, certainly the forgotten men of the private taxpayer will be left holding the bag. This is something that I found out today that I couldn't believe. You can have someone literally under this bill buy $1.5 million home. And in some of these markets, Southern California, Las Vegas, you could easily buy $1.5 million home. And you could have seen that $1.5 million home lose value so that today maybe it's only worth $500,000. If you have that borrower go into bankruptcy court today, based upon today's fair market valuation, the bankruptcy court can go in and take your $1.5 million loan, reduce it down to $500,000. What happens to the borrower? They can sit in that house for 5 years. Once the 5 years is up, let's say that home has gone back up now, it's worth $1.5 million again, then the buyer can go sell that house and they pocket that $1 million. What about that $1 million? Do they have to take it on their income? Absolutely not. They don't. There's no income tax consequence. Is there a capital gains consequence? Under current law, $500,000 of that gain would be tax-free. In other words, that borrower would just skate. The lender was left hanging, the taxpayer was left hanging, but that borrower who was able to live in that house for 5 years takes $500,000 in cap gain free, no tax consequences. What a deal if you can get it. And of the remaining $500,000, they pay the cap gain on that. Amazing.
Would the gentlelady yield?
Yes.
Who's going to bail out the bank when the bank loses that money?
There's only one person left at this point to bail out, and what the president and what the majority that runs the House and Senate have said, it's up to the American taxpayer. It is the forgotten man of the American taxpayer who is one who is on the hook for every single one of these boondoggles that we have seen introduced in Washington over the last 7 weeks. It is the forgotten man of the taxpayer. And what's worse, under this legislation that came through today, you can take what's called the Truth in Lending Act. And the Truth in Lending Act says something like this. If in that example that I gave of someone who takes a house, they buy it for $1.5 million, it's now worth $500,000, the bankruptcy judge says, now you only owe $500,000 on this house, that person could go ahead and they can comb through the Truth in Lending Act, and if the bank that made that loan, instead of giving 2 copies of the loan to the borrower, they only give them 1 copy, that lender is in violation of the Truth in Violation Act. You know what that means? That means the lien or the mortgage or the lien that the bank has against that house, it goes away because the bank missed a technicality. So that because the bank missed a technicality, that person with the $1.5 million home that they're now getting for $500,000, they've just gotten a free home. I mean, they own nothing on it because that bank has just lost their loan that they had, their lien on the property, and this borrower skates away. Here's another thing that's even worse. Let's say that guy had, or girl, had a $1.5 million home. They take out a home equity line of credit for $1.5 million against that house. They go out, they buy a yacht. They buy a BMW. They take their kids and they go down to Orlando. They do any number of things. So they take that money and they spend it. Guess what? Same result. They will owe nothing because if the Truth in Lending Act, if not every jot and tittle of that Truth in Lending Act is followed, that borrower can not only see their loan principal reduced, they could see it vanish and go away. This is beyond belief. It reminds me of that television show, Deal or No Deal. You know, you keep looking to see if some banker has violated some technical provision so you can get a free house. It seems like we're now in the business of turning normal Americans into crooks, where we're going to encourage normal Americans to just stop making payments on their home. Why? Because they can get a better interest rate, they can get a reduced principal, they can get terms that are up to 40 years with 0 interest. Just think of the inducements. Shouldn't we be inducing Americans to make growth decisions, good decisions? These are graveyard economics for the future of our country. And think of the lessons that we're giving to the next generation about how to conduct your financial affairs. Doctor,
yes.
Wouldn't you agree?
Just a question. You brought up a great point a minute ago about the massive borrowing takes money away from private business. Do you think that what we've done here in the last 7 weeks has been a job creator or a job killer when that much capital goes out of the market?
Doctor, what would you think? I mean, this will be a job killer. As I said, this is graveyard economics. We will not only see, I believe, a continued diminution if we follow the Obama administration's new calculus on the economy. We will see our senior citizens, I believe, continue to reduce the valuation in their 401ks. That's not the future I want to see, but I think we might. I will yield to the gentlelady from North Carolina.